Hello traders, and welcome to my Ethereum price prediction video. So in today's video, I'm going to give you guys my outlook on why I think you should be bearish on Ethereum in the short term, being a week to 2 weeks, and that we are going to begin to be in a retracement period. So as you can see here, I have a 5-wave Elliott wave sequence. I can see that this is wave 1, that we had a correction in wave 2. And then we had this powerful up move for wave 3. Then wave 4 corrected again, but not as much as you can see as wave 2 did. And now I think wave 5 is just about over. Now, why do I think that wave 5 is just about over? Well, I used the extensions from wave 2 and wave 4 to plot why I think this won't be over. And if that doesn't make sense, I'm going to show you guys exactly what I mean. So if we take wave 2, which began right here, which were traced down to here, let's draw a Fibonacci extension. So we're looking at these numbers. And you can see that 316.75 was the resistance level right here. It was actually 320, but this level acted as resistance. And price hit it and then immediately came down. So this was a very good level to sell at actually. And then if we do that again and draw another Fibonacci extension, but for wave 4 this time, you can see that the 161.8 extension is actually right here at 350.28. So I think that this formation is going to turn quite bearish. Another reason why I think it's going to turn quite bearish is not just the Fibonacci extension here that would show that this is the end of wave 5, but also if we zoom in here and look at these candlestick patterns, we can see that there was a very weak bullish candle here, not a lot of volume as you can see, and then a doji that formed here on high volume. That's a bad sign for bulls in the market. And then we have this wave that I think will probably turn bearish. This is an evening star formation where you have bullish movement, a doji, and then downward movement that begins a downtrend for the correction. Another slightly more complicated reason why I think that the 350 level is going to become resistance and price is going to come down is just because of the ratios of the waves. If you're not familiar with Elliott wave theory, then this might be a little bit more complicated to you, but I think you guys can understand it. So we know that usually wave 1 and wave 5 are usually equivalent, or wave 5 is 0.618% the movement of wave 1. So what does that mean? That basically means that if wave 1 goes up, like let's say 100, we would expect wave 5 to either go up 100 or 61.8 points from the end of wave 4. Wave 1 actually went up 131 as it went from 132 to the high of 263 right here. And if we see this actually went up 79 from this low to this high here. 79 divided by 131 is around 61.8%. So that is another reason, just because of those wave ratios, that I think the price is likely to come down. I also presented another example, and I'm going to show you guys that on my screen here, where if price goes past the 350 level, so I think that if price goes past 352, I'd say, then I think you should be quite bullish on it, as long as price is consistently moving upward, of course. So if I'm wrong on my bearish example, which I think that I'm more confident on this example of price heading down to 301, I'm going to a quick note on 301. It's the 61.8 retracement of wave 5, as you can see here. 301. So that's an important point. 300, 301. I think that I'm much more confident that price comes down than this one. But this one also, this one could happen as well. Now you might say, wait, why 400? And that's the same reason why I had just said before. Wave 1 is usually equivalent to wave 5, or wave 5 is 0.618% the movement of wave 1. Again, wave 1 went up 131 points, as I had said. And if we look at the low of 271 and just add 131, which is the movement of wave 1, then we would get 402, which is just about 400. So I think that 400 is a great spot of resistance. And also, it being a 4-0 number, has 4 zeros after it, it's quite powerful. As you can see, 300, 200, and 400 will be natural resistance and natural support. So I think this level is a great place to take profits if you want to be bullish on Ethereum. And then I think if price comes up to here, that we'll definitely get price coming back down to the here-ish, to the low 300s, before it probably goes higher. So that's going to be it for my bearish and bullish outlook on Ethereum. I sound like a broken record, but for the third time, I'm more confident in my bearish example here. And I think that this will become an evening star, and that price will come down, and that that you probably shouldn't buy Ethereum anytime soon until it corrects a good amount to either the 301 for a short-term correction or a more major correction, which would be about from 132 to here. If we look at the 61.8, this would be quite bad, but price could also come down to around 215, because that is the 61.8 retracement of this structure, as you can see. So remember, 215 and 301. Those are two numbers that I think are quite important when price comes down for Ethereum. So that's going to be it for the video. We've gone over a bit of Elliott wave theory, and we've looked at a bearish and bullish example and some candlestick patterns as well. And I hope you guys learned something. If you have any questions about this video or my channel, feel free to ask them below. Thanks for watching.